Good morning, everyone. It is Tuesday, December 7th, and this is Morning Market Movers, where we do live analysis for day trading and take a look at hot spots in the markets for today. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple, Brian Caprice. Before Brian and I jump into hot spots in the markets, we do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. What are we looking at today? Well, it's the traders, the markets are becoming infinitely more comfortable with the fact, or as data comes in, not the fact, because we still need more data to come in to prove it, but that Omicron is not going to be as severe as initially feared. And what are we seeing? Here's a picture of the Dow. This is from the initial concerns late last week that, oh my God, we're shutting down borders and travel restrictions and this variant, and the markets got absolutely hammered. And as we can see, we are climbing our way out of them. In fact, if there's a chance that the Dow, if it climbs back up above 35,800, goes full circle. Brian's not quite a parabolic retracement, but certainly close enough to it. What else are we seeing? Well, oil got absolutely hammered on all this news. It is also on a tear on its way back. What do we know in the FX markets? What foreign currency pairs move with oil? It's the Canadian dollar. So we've got things moving around. I think we're going to take a look at oil probably first. We'll jump over to that Canadian dollar because those charts are pretty interesting. And then we'll finish up and take a look at these equities because the Dow, everything is extending its gains from yesterday. Dow up a full percent, up over 300. NASDAQ up almost 2%, up over 300. The S&P up between, almost 1.5%. So here we go. Here we go again. Brian, let me flip it over to you. Let's run through the news and take a look at oil, Canadian dollar, and the equities.
Yeah, so a lot of movement. One of the biggest ones that we've talked about, and again, we're seeing a bunch of headlines come through right now from ECB's Mueller and a couple other people out there on inflation. It's kind of funny. It's kind of matching what Yellen is saying as I see it. It's like, wow, they're saying the same thing. They have like I feel like there's some plagiarism.
Same talking points.
Yeah, it's like, what? Biggest news, obviously, is OMA what, OMA who. Oil returning back to where it was before. So, we said this last week. We mentioned it yesterday that if it turns out to be nothing, I mean, it's like the media is grasping on whatever. Oh my God, we got to shut everything down. And now we're seeing the exact opposite. Economic sentiment in Germany as well as the euro, both, and I would say probably closer to blew it out of the water. They're both expected to be lower, and they were too negative. Yet you're starting to see a little bit of reversal in the euro, but the dollar's taken off. China's having surplus issues. Dollar CAD is down 119. Again, a lot on oil, but also on Canadian news. BOC basically said, and this is and again, this is Canada's situation, but listen to this. This is amazing. We changed our forecast to predicting 4 rate hikes next year. 4, 1 in each quarter. After all, the economy is growing strongly. Employment is at record highs, and inflation is soon going to breach 5%. However, the emergence of the Omicron variant is a cause for concern that could result in some consumer caution that negatively impacts it. But what are we seeing? Zero impact from that. Again, this is a pre-written statement. It was probably written last week. But what he did say is the economy is growing strongly, employment is at record highs, and inflation is soon going to breach 5%, which is 2.5 times what we're looking for. Yellen this morning, just a little bit ago, her biggest worry today is not that Hawaii is basically going underwater. It's that inflation is her main worry today. And I love this one. Some shortages will take a couple of years to resolve. Not sure what world she's living in, but pretty much whatever shortages are going to exist, somebody else will pick up that slack very, very fast. We see it everywhere. I'm not sure what shortages she's talking about.
It's kind of vague, so maybe she's referring to something.
Yeah,
I don't know what
and she says the labor situation is very unusual.
Maybe that's what she's referring to.
I guess, yeah. She says the labor situation is out of the ordinary. The high rate of quitting points to a tight labor market. I'm like, I don't know if that's quite what it's pointing to. So I feel like, I don't know. I feel like she's like the lady in like the mushroom that just reads stories to kids. She's like, it's a little bit weird, right? I've never seen it like this before. It's like, then get out of the position if you don't know how to handle it, right? There's that saying, if like you can't take the heat, get out of the kitchen. I don't know. I just feel like there are many other people out there that seem like they got their finger on the pulse of what's going on, and it's not her. VIX right now, VIX is down. VIX doesn't care that inflation is the main concern. VIX is down 12%. Indices, what are they? All in the green. All in the green big. Yesterday we talked about that 4,600. Every single, actually 2 out of the 4, the ES and the YM, both had 15-minute opening trade setups. The NQ, again, had a quick one right off that psychological level at 15,800. We told you yesterday that 16,000 was on the radar. Well, there we go. Europeans drove it right past through 16,000 this morning. We're at 16,146. YM, again, we're close. That 36,000 is just looming right over there. It ran into a little bit of a problem in the European session, didn't spike as much, and you guys can see the two levels we talked about it. It based in one, hit the other one, came back, used the other one. Again, that the old Harry Potter trade right here, grabbing one and using the other to take off. And Russell, up big as well. And what did it do? The 22,164. We talked about it yesterday. Nice area of sellers, one top base, pulled it back, helped form a new bottom, and then boom, off to the races as of late last night as well. And again, this one did have an opening trade set up as well on the 15-minute. I'm on the 30 right now, but on the 15, it also had an opening short, which is funny. ES and I believe it's ES and Russell both had great opening trade setups. Both of them kind of hammered right to the downside. Russell, actually, you could have taken long or short in the short duration contracts. And not only would the spike have worked well on the downside, it actually would have worked well on the top side as well. So it's just showing you what December volatility looks like. I think we'll be in a similar scenario today. Looking at the VIX right now, and again, I'm a little bit delayed, more or less flat, but again, we're starting to return back lower. The VIX doesn't exactly work the same way as other charts do because, again, it's kind of a volatility index. It's not like a supply and demand based tool. It's more of a kind of like a psychological gauge. Like, it tells the stock market. And why I say, come here, sit on my couch. Tell me what's going on. Although it is on a purely technical basis, we do know we have, this would be buyers down here, but people are not buying the VIX. It's not a product. So it's a little bit different there. But it is kind of on the lower end of the curve. And again, all we're hearing is, the OMA what, OMA who. We don't know anything going on about it, OMA anything. Jump to the next letter. Like I said, Yellen's concern is right now inflation, but Hawaii right now, I think half the island is without power because of flooding, because of severe storms.
All those people, nice blizzard going on out there. I think you could ski the volcano.
Yeah, I mean, all the people that did the rain dances, you guys did too much. You went way too crazy. All you Californians and what that wanted the drought to be over, you did too much. You danced too much, and now there's too much out there. So, that's a big deal. But again, all the indices are high. I would expect a little bit of a retracement this morning. What it may provide is quick opportunity this morning on the 15-minute charts. Look for potentially a pullback or maybe even a little bit of a rally up. Again, even though the market is a big green, there was 2 different opening trade setups that were shorts yesterday, and all it did was take advantage of this quick spike down and quick spike up. So no reason to beat it all day if you don't want to. But with that said, where we are, ES-wise, we know we're approaching levels up here where we've kind of seen some sellers come in at 461. If it can break through that level, we're off to the races until 47.25. So could be an interesting day for some of those, again, maybe some knockouts if we can find a cheap knockout as it pulls back. NQ, kind of a similar. You look to the left, don't really have a whole lot until we get all the way back up here to 16,410. So could be a good tech day, and Apple looks like it is already gapping higher. So
it is.
That's a good day for NQ, and even Tesla has gapped higher. It's still showing down from yesterday from where it started, but Tesla's gapping as well. So all these things already look good for NQ to hit 16,410 today. YM also rallying higher, and again, we're going through that psychological level right here at 35,500. 35,800 is right there. That's really that's the first time. So with it starting to pull back a little bit now, and again, I'll drop this one down because this one looks like it could be pretty interesting. Yeah, look at that. Level of basing sitting right on the dotted line, which is the 15,500, right? They're right there, and we're starting to see it pull back down. That could be a nice little long opportunity. Again, short duration call spreads, short duration binaries. And again, I'll talk about call spreads today because they've just been hammering the opens lately.
Yeah,
and then Russell.
I mean, even on the Dow, some of this rolling over a bit. It's the Europeans taking their profits, getting ready to wrap up the day and turn it over to the retail trader in the U.S.
Hmm.
So, I mean,
Yeah,
that's you might get
yeah.
that opportunity.
Yeah, and they're all going. So again, I think there's going to be some great opportunity today at the Open. As far as speeches go, there are no speeches. It's just going to be a headline that can affect this. And like I said, we had all this stuff last night out of Australia. Yellen is basically 2 hours ago saying, "Yeah, I'm worried about that." But again, we've been talking about that for months and months and months. Powell's already talked about it. They said they're going to control it, and this is now her main worry. So I don't know. I'm not really sure what she's doing, but I do know that oil was where we saw the most inflation. Remember, this is where the Fed is, not the Fed, but the president is really going to focus most of his attention. And he got some help from, and again, this is a 15 minute. Let me bring back to 30 so we can see more data. We got some help from Omicron, and that's what drove it down. And then somewhere in here, we released 50 million barrels. And now that Omicron is disappearing, we're seeing it rally right back up again. The problem is, I mean, and again, we do have a level sitting that's pretty decent right above, coming right up to this level right here. 73.58. Uh, right now, I would say, I mean, this is even in the European session, they started to drive the prices higher, and this is a decent pullback on a 30-minute. Kind of the way that it's setting up, there are buyers there. This is setting up for another push a little bit higher. And again, 2.2% is big on the day. 150 is really an ATR, and we haven't even gotten in there with the U.S. session yet.
Right.
So one of those things, Omicron was really the big deterrent in keeping oil prices low. Remember, OPEC likes it between 75, really 73 to 80 is their preferred kind of sweet spot for it. It's a little bit low, and if there's no Omicron, if there's no risk to Omicron, or it's a very, very small risk, yeah, there's no reason why it shouldn't go higher if we're driving
Demand's going to
demand.
go
So
up, and they already said they're not going to. I mean, they're going to
yeah,
keep their output where it is.
Yep.
So
Yep, and all those tinfoil hatters, that's what they're saying right now, is that Omicron was created by OPEC, right? So, that way they could drive prices down, and OPEC could say, we're not going to produce anymore. So we'll see. But natural gas is following the same suit. Natural gas is also up 2%, right? It's up 2.6%. You can see that we did have that bottom. We said, find that bottom, take it long. We ended up getting that bottom off of it yesterday. So again, even natural gas has found a bottom out there as energies continue to rise. And remember, energies were the driving force in inflation, and thus far nothing has been done to curb it. So, I would say with what we're seeing, it looks like there's a lot of positives out there. European session was not bad. The Bitcoin is up again. TLT is back down again.
Canadian dollar, because we talked about oil taking off. Let's do the CAD and before we wrap it up, because we also have the boot camp today. So.
Yeah, so we mentioned it last week. We were at a very, very high, level. We were looking for shorts. We got one. We opened up the week right in that level, and I mentioned it yesterday, the 28.33 level. This is where we were sitting yesterday. I said we're still high. Watch for some buying coming in right here at the 27.50. And we bounced, we based, and then we continue to drop. We blew through the first target. We're ahead of the second one. This blue box, and I say this every Friday. Make sure on Sunday nights you're looking at the weekly call spreads or even the knockouts of where they're printing. There's a lot of times there's some really good opportunities. We knew oil was high. We knew why oil was high. We knew that was low. We knew that the weak oil makes weak CAD, which drove the US CAD pair up. Omicron disappears, all of a sudden oil strength comes back again. Being in an area where there are sellers, this was the perfect opportunity to short. And you can see this blue box is actually the weekly call spread for oil. There was something right in close proximity. It was just a little tiny bit in the money, and now it's 2/3 of the way through. This thing is driven from where it opened, 180 pips to the downside. That's a big move, guys. I mean, that's 2/3 of the entire call spread. Knockout wise, we've already broken through 3 knockouts to the downside. So this is why on Sunday nights, a lot of people are like, I can't trade. It's Monday, Monday morning. No, Sunday night is when these trades were established. And again, this is a big move. I think 3 knockouts have already been broken to the downside that if they've gone completely through, and a weekly call spread is almost all the way through. So again, daily call spreads have just been busted again and again and again. I don't see this stopping much. There's a little hiccup here, but I think 126.36 is probably the next area where we target
everything's retracing. The Canadian dollar, I mean, that whole move, because oil moved because of Omicron, it's looking to retrace that entire climb up. It's going to come all the way back down to equal, where it began. Just like we're seeing all the indices, it was the other way around. They all got hammered. They're all climbing their way back out. Oil got hammered, climbing its way back out. I
Yeah.
think people were looking for a reason to sell. I think there's a lot of people out there that were talking negativity in the markets. They were
Hmm.
saying, "Oh my God, we're going to have a sell-off. We're going to crash. We're going to crash." Omicron came. There was some strange reactions from governments actually, I'm not going to say they're strange. Some immediate reactions because they didn't know, so they took some
Hmm.
very extreme precautions just until they knew. And now the data's coming in and they're finding out, well, yeah, this thing is spreading, but it's not causing any of that severe illness. So what are we battling? And
Yep.
so
Yeah.
people got that match to light the fire because they
Yeah.
wanted that washout. They got the washout, and then they're realizing that there really wasn't any
Mhm.
real reason for that. As more data comes in, then there's still more
Yep.
to. I'm still going to say there's still more to come. We
Yep.
don't have all the data, but the data is looking pretty encouraging. Now what we got to worry about is actually what you were talking about at the beginning is, well, this inflation thing. What's the Fed going to do with interest rates? Are they going to,
Mhm.
now that the markets have climbed back out from this Omicron blip,
Mhm.
are they gonna smash the markets by just jacking interest rates with surprise uh increases? Oh, we get an increase in January.
Yeah, and today is the Zoom call. So we know that today is the Putin
The
Biden Zoom
right
call. I don't. I
the
was looking. I was scrolling through. I was trying not to be distracting. I was trying to look through. I don't see a single headline of anything from that conversation, which means, like I said, I
Do
don't know
we
the
think
exact
we're gonna
time.
go to war? Do we and I think what they have the Zoom call, and obviously each you
Mm.
know the US is going to threaten Russia with severe economic sanctions if they invade, and you
Yeah,
know
well, and again, that's important to bring up because the economic sanctions are wonderful, but Russia is an OPEC plus member.
right.
So is Biden going to threaten sanctions and Russia says, "Fine, we're not going to send oil to you." That jacks oil prices around a lot. And Biden, it's a very hard situation because if he does something that irritates like like a grain of sand in an oyster, you irritate that even more and oil prices, I mean, they go higher. The number one spot that we're seeing inflation is inside of the energies, and everything else will follow based off of the energies
Yeah.
because transportation costs and everything else. He puts those on there, and again, he's already blocked or not blocked, but halted the sanctions for the Nord 2 pipeline. If he doesn't do anything now, and it's kind of that lame duck, like, oh, we'll do it. You don't want to tempt us, right? He drives inflation even higher. Not that it doesn't need to be done, but at this point, it's already out of hand, and now this is adding more fuel to the fire. That's it. I mean,
Yeah.
it's
Well,
midterms are
right.
major 3.
Diplomatic things. Obviously, they're going to do all the
And
diplomatic
yeah.
solutions, and those will, barring an actual war, in which case,
Well,
then there's other
I mean, they put
problems.
yeah. And I mean, and Biden made comments yesterday to China, which nobody expected them to do. Talking about boycotting the Olympics over there based
Yeah.
off of inhumane. It's like, I mean, there was already some drama over Taiwan. Now it's going to be. It's like, no, we're
It's going
boycotting
to
it
get a little
because
bit
of
more.
human rights. It's like,
Yeah.
whoa, where did that come from? I mean, just call him a currency manipulator and get it over with. So yeah, there's a lot out there. Like I said, everybody is testing Biden on multiple fronts, and thus far, it's kind of again, dealing with inflation is going to be key because if you deal with inflation, people will tolerate more. But as inflation gets farther and farther out of hand,
That is
it's
going to
just
be, yeah.
it's a very very hard scenario. So with that said, guys, jump on your 15-minute charts. It's 9:04. There's going to be probably some opening setups. Kind of seeing how these are already starting to look, the way they're pulling back and running back to levels. There's probably going to be some 15-minute setups this morning. So get out there, check your short duration contracts on the 15-minute for all the indices. And again, I would say good
Yeah.
trading today.
We got a lot going on. So with that, any questions for Nadex, please email us customer service at nadex.com. Any questions for Brian, you can email Brian at support@keeptradingsimple.com. We did cover a lot today. Uh, Omicron appearing not to be as severe as initially feared. You're seeing equities climbing out of the hole that they dug from last week. You're seeing oil do the same. You're seeing the Canadian dollar, which it was getting crushed on weakness as the chart took it to the upside. It's reverting, coming all the way back down as oil gains in price. That certainly helps the Canadian dollar, along with other things going on in Canada. A lot moving, a lot of volatility, great trading opportunity. Brian and I'll be back tomorrow morning. Want to wish everyone good luck in the markets. We'll catch you then. Thanks, everyone.